Woolworths, and this is one that we've long held in the hot stocks portfolio.
And added to at the tail end of the last year.
So we really love this one, high level of conviction. And as I said earlier, it's a combination of food and clothing
And of course, South Africa and Australia. Market capitalization?
73 billion rand. PE here, 15.3, a dividend yield of 4.5%.
Let's look at the share price to start with, because it tells a story, and it's not been an easy time for them. Hits about 100 Rand a share in 2015. Since then, results a little bit underwhelming, maybe. Trading conditions in Australia not always super first class. Clothing a little bit difficult because of winter being so warm. I don't remember winter being warm myself, but apparently it was.
It's climate change. We'll be discussing that in Davos next week, so I've got a lot of insights. Quick one on Woolworths. If my Woolworths card is anything to go on over the festive season, then Woolworths has shot the lights out.
You might be the exception, because Woolworths has actually been the loser in the last year and a bit. I mean, they have done the worst out of all the major retail groups. Pick n Pay and others are stealing their market share. They've had negative real term growth. Clothing was extremely poor, and as you know, as Paul said, when they came out with the trading update, they blamed everyone except Jacob Zuma for bad sales, except himself, of course.
Well, I must admit, there is a very conscious effort by the likes of Pick n Pay to capture the children. So I'm going back to the sticky phenomenon. My children force me to go and buy. My children force me to go and buy all my washing powders and sunlight, etc. at Pick n Pay. And I started shopping for food at Pick n Pay because they love their stickies.
Now look, Woolworths has been the winner for many years, but certainly the last year and a bit, they have been on the losing end of the whole retail environment. Their sales numbers, we were taking into account inflation, were the worst out of all the major retail groups.
Food remains fairly firm though.
Yes,
it's clothing. And the clothing is obviously, it's tricky because
there's Witchery, you've got David Jones, you've got these Mimco.
But the pricing points,
I'm talking locally here in this country.
I mean, I went to go shop for shoes at Woolworths, and their pricing points are high. This is not cheap. I mean,
can I tell you something else from on-the-ground analysis, considering Wayne's come in with his? The likes of H&M, the likes of Zara, those international retailers, their pricing points are very attractive, and the quality is on a par with Woolworths.
Which, as we know, creates a problem not only for them, but also for people like Mr. Price and so on. But look, bringing it back to the sort of...
In fact, Mr. Price is very attractive for retailers from a quality perspective and specifically from a pricing perspective.
And what about Australia? Because Australia, we know that they did the purchase, everybody got all hyped up. They've done some early reorganization, shifting of head offices and facilities.
David Jones wasn't bad, but it's Country Road is actually the problem.
A decline in earnings from Country Road, which we haven't seen in many years.
A strong decline. It was about 7%. Wasn't it?
Well, have they got the buying wrong?
I really don't
Probably
know what's gone
because
wrong there.
They mentioned in the trading update that Australia also had the associated weather-related difficulties. And understand here, what's important is not that winter should be cold or that it should not be cold.
It's
whether there's a transition. What they like the most, these guys, is when it's warm and suddenly, oh my hat, I need like a new cold wardrobe because it got cold very fast.
I do think retailers need to take cognizance, and I'm not being facetious here, of global warming. 2014 was one of the hottest years on record, pipped by 2015, and apparently 2016 is going to blow us out of the water.
Surprisingly enough, weather forecasting is actually reasonably accurate nowadays, so there's not too much of an excuse as to why you get it wrong. It's actually, weather forecasting is reasonably accurate.
But there's also been another thing, and that is apparently people are shifting towards layering, which is bad also because it means that you don't really throw out everything. All you do is you kind of have a
put on another layer.
Yeah, exactly.
Hot or not on Woolworths?
Woolworths hasn't been at a 15 PE for a long time. But unfortunately...
Did we look at the share price? Yes, we did.
Yes,
Sorry,
we did.
The 15 PE is actually quite low for Woolworths. However, I think that other people are eating their lunch and they haven't reacted properly to it. So surprisingly enough, I'll actually go...
You're not hot on Woolworths?
No, I'm not hot on Woolworths.
That's got to be a first. Is that the first time that you've called it not hot on Woolworths?
Probably.
Well?
Look, the extra bit that we bought in late November, we got at quite a good price in the low 60s. It's now back just above 70 rands a share. I think it's a quality operation. The management team is good. The product concept is good. So I'm happy enough to remain hot on this one.
I'm just going to ring a little bell there. Competition. Anyway, so we've got a hot and a not hot on Woolworths.